So in 2024, the feds are showing signs that they're all going to decrease the rates slowly and gradually, but it is going to happen. So in this video, I'm going to give you 3 money traps that you need to be extremely cautious about because it could affect you. And if you're not paying attention, it could cost you thousands of dollars. The first money trap that's going to happen is you're going to keep your money into these high yield savings accounts, CDs, and money markets that were making you so much money in the prior years, but now that the rates are dropping, it has changed and it might not be the wisest thing to continue having your money in certain high yield saving accounts. You see, when the markets start making adjustments and the signal is going out that the rates are about to drop, a lot of these institutions will start changing their interest rates to adjust to it. So what you really need to do is start paying attention and start seeing the trends. And especially a lot of these banks, they do like to send out notifications, which I really appreciate, showing about how the interest rates on your accounts are dropping. You cannot ignore this. This is an opportunity for you to start looking around and see if there's other options available for you, because it's simple to just leave your money into the account and that's it and not change. I know it's a hassle, and if you don't really care much about the interest rates, then by all means keep it into your account. But if you want to be wealthy, you want to be rich, you need to pay attention to all these little details that's going on within your accounts, especially a cash account that was earning you interest and now it's earning you anything. It might not be worth keeping it in a lot of these accounts. What I personally do is every few months, I take a look at accounts. I see what CDs are out there, what high yield savings accounts are out there, and which rates are they offering. Now, I'm not gonna pick an account that strictly just has high interest rates. I wanna pick an account that see high reviews and a very good rating. If they have all that and a high interest rates, I usually switch over and go into those accounts. The second money trap that people are having is they're paying high interest on either your home or on your car or on credit cards. You see, we're coming from an environment where interest rates were so high. You have credit card APRs being 22 to 23%. Some home mortgages are having interest rates of 7 to 8%. And cars, come on, they're extremely high. And a lot of people, unfortunately, during those times, they still made the leap and they still made purchases. Well, now that the interest rates should be dropping, you need to be very aware about what's going on in the markets in order for you to take advantage to get a lower rate. It might be now the best time to get that home refinanced. So what I recommend for you is this. Pull up your credit report, make sure everything is accurate. All your balances and your credit utilization is under 30%. Fix all of that now, because you want to be ready for the day of all these rates start dropping, that you could be able to refinance your home. You also could be able to refinance that vehicle to try to knock down your interest a whole lot than it is now. And of course, you could call your credit card companies and see if they have any other offers out there that you might be able to take advantage of. They might have a zero balance to a card that might have a lower interest rates than the credit cards that you're having now. Now, you shouldn't be having a balance on your credit cards, but if you do, you might as well get this process over with. That way, you could pay off your debt and pay the least amount of interest on all your accounts. Guys, if you're getting any value from this video, I really would love it if you hit the like, leave a comment, and subscribe. I'm trying to get to 1,000 subscribers, and with your help, I will certainly get there. I really appreciate it. Let's get back to the video. And here is the third money trap. As soon as the interest rates start dropping, everyone goes in a frenzy. Everyone wants to start spending. All those people that said they'll live in paycheck to paycheck, they won't be living paycheck to paycheck no more. They're just gonna get excited and start spending. And this is where you need to be extremely careful, especially those people who are waiting on the sidelines to buy a home. You are waiting for that day for these interest rates to drop. And as soon as it starts dropping, you're gonna jump in there and you're gonna start buying all these things, and especially a home. This is where I caution you. Just because now you are able to get the interest rate that you are looking for doesn't give you an opportunity now to start getting a bigger home. Some people see an interest rate going from 8% to, let's say, 5%. Whatever it is that they're saving monthly, they think now they can add that savings back to get an even bigger home. So truthfully, it will be no difference, because before you could have possibly got a home that accommodated your lifestyle, and even with the high interest rate, the payment would have been comfortable. Now you want to get a bigger home with more responsibilities only because of the fact of the interest rates went down is insane. Also going to be seeing all these credit card offers because they know, listen, these guys know exactly what they're doing. They're going to just give you that craving of you wanting to get a credit card and go out and spend. They're going to promote how much the interest rates are lower than others. They're going to do all these things to try to entice you to open up a credit card. And now what you're going to most likely do is open up that credit card, try to get the reward points, start booking travels. You're going to start doing all these things and get yourself into a bind. You do not want to do that, guys. You want to avoid credit card debt as much as possible. And if you're waiting to get a car, right now would be the best time for you to get a car. But I will tell you this, these dealerships are smart. Okay, they know that as soon as these interest rates go down, a lot of people will start going into the dealership. That does not change the price of the vehicle. Remember, when you go to buy a vehicle, it's a negotiation process. They now have the upper hand of knowing you are desperate because you are waiting for just the interest to go down. And if you hear the interest is low, then the price of the car, they could increase it a bit and you wouldn't even care. You will continue to think this is how much it costs to pay for used cars. So you need to understand there's dealerships out there that will try to take advantage of you because they know exactly what you're about to do. So there you have it, guys. Those are the 3 money traps that you definitely need to pay attention to, especially during the times now where you're going to hear everything about the rates going down. I do not want you to get caught up into that vortex and get yourself into a position that you cannot get yourself out of. Now you are in a position of power to make a great move, especially when it comes to making a home purchase. That interest rate you're paying on your home is gonna go a long way. And the maintenance you need to do in your home and the cleaning and everything that goes along with owning a home, don't increase that by getting something that you can't afford. You have a great chance now to get a beautiful home and not be house poor. So make the wise decisions. And if you have money sitting in a savings account trying to save for a home, make sure you're getting the best rate possible. I really hope you guys pay attention to these money traps. Catch you guys in the next video. Peace.